Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. And I apologize for everything today. It's been a very difficult day. I've been offline all day. I've had internet technicians, not internet providers, but technicians here at the house trying to build me a better server systems and make things more robust and more reliable. And it's been a very difficult day, but we are up and on air. We are running. And I am making adjustments as we go, and let's see how it all pans out. Now, we've got lots of stuff been going on today. I've been seeing what's been going on with Tilray, the US government situation there. Absolutely huge news today for Tilray, and hopefully I can get some information out on that very shortly. This is the Tilray news here. If someone can share with me links for YouTube, I'd be very much appreciative of that. But we are preparing, of course, now for Amazon earnings. Amazon earnings. So let's see if we can get everything out. We are literally making adjustments as we go here. Thank you for your support today. I really do appreciate it. Let's have a look. Links for YouTube. I've got nothing in there just yet. Vince sent me something. What is this here? Vince, let me have a look here. Not sure what this is. Wide Point Gateway. I'll check that out later. Thank you for that. All right, I'll keep my eye on that. Links for YouTube, nothing yet. Welcome everybody over on the Extra channel. You've been following me there throughout the last half an hour, so we can get in the studio back up online again. Welcome back. Hi, John. Thank you so much indeed. I saw the super chats coming in for your support. It's been a very, very stressful day. I appreciate you all for doing that. I did see it, and it was very, very nice. So thank you for that. All right, we're just going to go through the streams, making sure we've got everything running as it should be. Yeah, we'll do a few tests as we go. It's been one of those days today, I'm afraid, but it is what it is, I guess. That's the old saying. I hate that saying, but it is what it is. Now then, I'm going to do this because the earnings doesn't start for another hour yet. We are very, very early, so I'm going to see if I can get these videos out. We've got tomorrow morning the Fed. That's important. That's good. Bloomberg, that's good. That's already. And let's keep going. We're live on Rumble. That's good. We're back up there as well. Fantastic. Thank you guys for your support today. It's been all over the place. I've had a technician here building me a new network service. So everything's been upside down today. But there it is. What else have we got here? Let's go to the videos I've just got to put out. I wanted to do reviews today, but that's all been put back at a minute. Amazon, we've got that ready. Yes, there's the Amazon earnings. Got a little ways to go. So let's see if I can get these videos out. We've got the FOMC report. That's gone out. Great. So Amazon. Let me reuse this. So just bear with me. This is what I'm doing now. I'll show you what I'm doing. The Amazon earnings doesn't start just yet. We're early. Amazon earnings cool. Let me put that out. So I'm going to do this as I talk to you. Main event. There's the main event tonight. Amazon earnings. Let me. Did I make a video? Did I make the trailer? I haven't yet done that, have I? Okay, so bear with me. Let's see if I can do this then. Let me change it over to here. I'll have a look in a moment in the breakfast bar. Just bear with me. I'm catching up because we've been off. If you just tuned in, we've been off air all day today due to building a new network, and it's thrown everything upside down. But hopefully I can get this back up and running as quickly as possible. So we've got time before the Amazon earnings. So just bear with me. So Amazon, AMZN, Amazon. documents. Amazon. Amazon, there's the logo, right? That's what I need. Okay. If you've just tuned in, we're getting ready for the Amazon earnings, and we are all out of sync today. We've had a major rebuild in the studio, and that's what we're doing. That's what I'm doing at the moment, putting all that together. Amazon, there we go. Amazon earnings. This is live, trailer, layer, flatten, save. So I'm working in the background. We haven't actually started the main show. I just wanted to get live with you. Amazon trailer. Thank you for that new subscriber. Appreciate you very much. There you go. Okay, let's put that in there. Amazon trailer. Select, promo, put that out. No altered content. No, no, no. Next. We've got 50 minutes before the Amazon earnings. So we're going to be early for it. I just wanted to come on and test the systems, which is what I'm doing now, rebuilding our systems up. We had to have a new system put in, so we're just, I say we, it's just me here, but I'm slowly putting everything back together again. So thanks for being here and supporting me. Appreciate it. Hate letting anyone down, but I couldn't do nothing about it, I'm afraid. Let's put that up there. FOMC report in the morning and Amazon earnings now. There you go. Add video. Amazon fed. Video fed. Save. That'll do. Live. Now, if someone can send me through the information about what the Fed have done today. I know what the Fed have done, but I haven't got a link for it. I have not had a chance to grab a link. If someone can send it through to me, I will put it out as a video for the Tilray investors and all the others. It's a massive day today, of course. This is going to change the world effectively. We've now got legalization coming to the United States. We said it was going to happen. We said it was a $40 stock. Stand by that. So many of you have made a lot of money today on Tilray, and I'm really, really pleased for you. Okay. Schedule, put this video out, set as a premiere. So where are we now? 15:37. April the 30th. April the 30th and 15:40, 3:40. 3:40, there you go. Let's get that out. 3:40 p.m. Yes, set as a premiere. Take you directly to the Amazon Live. There you go. Save. Save, put that out. Okay, great. That's that done. That can wait till tomorrow. And that can also wait until tomorrow. Okay, so I've done everything I need to do. So I can shut down Photoshop. Shut down that. Right, let's have a look. Let's read some of these comments. I think we've got everything pretty much back to normal. We seem to be good. Let me check my speeds. Right, we've still got another 40 minutes before the Amazon earnings, so we've got time to do any news updates. So let me come back to that. Has anyone got any news updates for me? Let me read all the comments as well. Tilray Brands today had a massive day. It was up like 45% at one point, which is great. We're not going to get to $40 in 5 minutes. Let me read through the comments. Hello, everyone. Martin, you need to wind down. We have had fun. We have had fun, even without you. Don't worry about it. We are fine, and you should be too. Thank you, Vaz. That's very kind of you. We understand, mate. And says Lil Baby, AMD, want to laugh? Check our breakfast bar, Martin. Okay, I will do that now. Yep, 6 months a member now. Mark Saxby, you got 6 months. Excellent, congratulations. I didn't see that. Let's give that a cheer. Lovely stuff. Nice one, Mark. Yes. Hello, Mike Koza. Thanks, Vaz. I told you within about 15 minutes of the news being released. You did. I got a text and a phone call. I saw it. I couldn't take the call at MSK. I was with the technician in the house. So, yeah, I did see it. I also sent the link on WhatsApp. Yeah, I saw it. I just couldn't do nothing about it. Amazon, it will drop. What do you think? Let me have a look, Amazon, right now. Let me open up another window. Of course, another window. I've only got about 100 open. Let's open up another one. Amazon. Let's have a look. Okay, so estimated 78% cents per share, and they've done 98 cents a share. It's a good beat. Actually. There's nothing wrong with that. It's not as good as people would like, I would imagine, but yes, it is a beat. Let me share on the screen the beat. So Amazon have beaten on earnings. So you can see here, there it is, 78 cents. They made 98 cents. But you can see it's starting to flatten. That's not what Amazon are used to. So they won't like that. But that's why the markets will sell off. But that's okay. We can live with that. We're okay with that. So there you go. Good evening, Martin. How did the IT man get on? Yes, hopefully we've got a better system. We'll find out soon. You'll see. I mean, I'm testing it now. I can't access Discord, Martyn Lucas. Why? I don't know why. MSK. Right. MSK.
Vaz donated £9.99 through a super chat. Would of you mind reviewing VLD, Velo 3D, again this week, please?
Okay, Vaz, let me write that down. MSK, if you go into Discord, send me a message. You can always send me a message if you're not on the server. Maybe something's happened. Maybe you've been kicked out or you're not a member or something like that. There's the link to Discord.
Vaz donated £4.99 through a super chat. And cover the earnings next week?
Okay, just bear with me a second. I'm not sure why that's happening. Well, that's a bit peculiar. I don't know why that's happening. It's probably because we started the stream so quickly. You've got the link to Discord, haven't you? There's no reason why you can't access Discord. Let me give you the link again. Send me a friend request. Make sure that we are on. Or give me your username and let me search for you. All right, MSK, if you could do that, that would be great. I don't know what your name is until you share it in the chat here. Afternoon, everyone. Jason Davis. I'm supposed to be doing your review today. Jason, I apologize. I'm sure I've hopefully explained it. I've been off today, offline because I've had my network's been rebuilt. It's been a nightmare today. It really has. But anyway, I hope you can forgive me. Right, let's get our first review. So here we go. This will go up. These will all be done tomorrow. Right, let's write this in here. This is what is it? VLD Velo 3D. This is for Vaz. He's given me a super chat of $10. Okay. I've got Jason Davis is the top of the list waiting at the moment. I'm trying to get to it. Velo D 3D Vaz. There you go. Let's put that right. Okay. Velo 3D Vaz. Right, that's done. I've acknowledged that, got that in. Right, and cover the earnings next week. Well, let me see what date it is first of all. So VLD. Let me have a look. VLD, Velo 3D. The earnings is expected May 10th after hours. Let me have a look. May 10th after hours. That's May 9th. Yes, I can do that. I confirm I can do that. That is expected date. Can't confirm that's the date at the moment. May 10 after hours, and this is for Vaz. Okay, there you go. That is in. Yes, I confirm I will do that for you. Yep. Thank you very much indeed. That's now in. Stupid iPad autocorrect. Don't worry about that. That is a good, Martin. I hope you're well. Thank you, Connor. Mike Koza, good afternoon. What's up with VLD? Martyn Lucas, it's because my personal laptop is down at the moment. The charger is done. Oh, I see. That's why you didn't get on Discord. Because, right, okay, not because of me. I can't download anything on my work laptop. Okay. Mike Koza, it will either shoot through the roof or be the new SFSR. No worries, mate. Thank you, Martin. Thank you for all your support. I appreciate it. Right, we've got through all the questions. Now then. Okay. I think I've done everything. No links for YouTube yet. If anyone could send me links for YouTube for what's happened today with the cannabis sector, let me know. I want to make a video on it. I've got time. I think I've got everything there. Yeah. We're ready there. Stream health. Thank you. You're very welcome. Good evening, Lucas Aids. How you doing? James, good evening. Martin, when is your birthday? My birthday? You've just missed it. It was March the 9th. It literally was 1 month ago. So it's not my birthday. Oh!
Eric donated $3.01. Crypto tip check 1,2. Check 1,2,3,4. 22.72000000 Doge.
Thank you very much. That was very, very kind of you. Thank you for that super chat there. Very, very kind. Thank you, mate. I wonder where Eric is. Is he over on the extra channel doing that? Remember, to do a crypto giving, you don't even have to be on the show. You could be anywhere for that to happen. So thank you for that. Guy, it's on the Marijuana Moment website. Please send a link to Martin. Yep, I would do it, but I'm just doing 1,000 things at once, making sure everything is good. Once I've got on top of everything, I will actually start to search for things as well. But anyway, it's a big deal. Of course, it's the news that everyone in the sector has been waiting for. So it's a huge day today. I appreciate that. Let's go over to here. Yes, that's fine. Tilray Brands up today, big time, of course. Links for YouTube. Let me go and see. Now then, I've got something in the breakfast bar to look at from Stacey Bailey. What have we got here? Let me see. I think that's muted. Let me have a look. Is that muted? I think it might be. Unmute. Okay, here we go. This is from Stacey Bailey.
For the little fellas.
The little fellas. Hang on a minute. What's all this?
That's right. It's rubbish.
Do it louder.
That's right. That's rubbish.
For the little fellas.
For the little fellas.
That's hilarious. Does sound a bit more Australian though, if I'm honest. Doesn't really sound like me. It's a rubbish impression. But there you go.
That's right. It's rubbish.
Do it louder.
That's right. That's rubbish.
For the little fellas.
For the little fellas.
That's right. I mean, since when did I sound Australian? Eh? Come on, folks. If you're going to do this, you got to do it right. Bloody hell, I'm not Australian, am I? What's all that about, eh? Anyway, Martyn Lucas, I left a comment on the tip. It was turned into comma. I left a comment on the tip. It was turned into comma. Yes, I'll read it out again. It was a bit confusing. I have to be honest. I wasn't quite sure what it meant. Recent events. Let me have a look. Let me go to it now. I didn't really understand it. Let me play it again.
Eric donated $3.01. Crypto tip check 1,2. Check 1,2,3,4. 22.720.
Oh, I see. I got it.
Doge.
I've got it. So what he meant to say was crypto tip check 1 2 1 2 testing 1 2 3 4. That's what he meant to put. Mind you, he actually wrote 1, 2, 3, 4. If he'd just gone 1 2 3 4, it would have worked fine. It's not my fault. I didn't write it. I can't be responsible for Eric B writing that the way he did. So I appreciate the tip, but the way it read out was, your fault. Nothing to do with me. So Eric B, appreciate it. Next time, now you know how it works, right? Vaz, the little fellas. The markets have been crazy today. I've had a good day. I have had a cannabis pie link in Discord. It's okay. I have a cannabis pie. I've had a cannabis pie link in Discord. Cannabis pie. It's up 3 stocks. James, I can't see your link. I've got no links for YouTube. I would make a video on it, but I've got no links and I haven't got time. I'm still setting stuff up. Vaz, Stacey, I know. He said, sorry, mate. That's all right, mate. That's all right. Don't you worry about it. It's absolutely fine. We won't fall out over it. It was absolutely fine. Don't worry. John Granfor, Goody, Tilray, I know. I'm waiting to report on news. I do not have any links for YouTube news yet. If you become a member, send it in and I will do it. I just can't send it at the moment because I haven't got any. Rubbish. Martin's hardly Crocodile Dundee. Crocodile Dundee? What's that got to do with anything? Hey, what's that got? Yeah, exact. Oh, I see Australian. Now I'm with you. Now I understand. I'm thinking, what are you on about? But now I get it. Now I get it. Right, my Stream Deck needs to be reinserted now. So I'm going to reinsert the Stream Deck and see if that works. I've been sort of building back my services as we go. But let's try again now. Let's try Discord. There you go. Now it's working. There you go. That's now working. We've set that up now. We're getting there. Go to stock news on Discord. Yes. There you go, Chameleon. What's that got to do with it? I took profits on Tilray as I feel it will go down before it goes up. I think that's the right thing to do. I don't know exactly what the news is yet. Go to stock news. I need to see what's going on with this. Right. Here we go. Rallo 1. Okay, now it's coming out. We'll move to click historic shift AP. Right, okay, that's that. Now we're getting some news coming in. Crag as well. US Drug Control Agency. Let me have a look at this. Justice Department will move to declassify. Is that the same story, just a different website? Justice Department will move. Yes, it's the same website. Okay. Okay, I don't need two, so I'll just use the one. All right. Get rid of that. Okay. Justice Department. Let's have a read. Okay. Okay. So we are there. We are there. I've got time. I'm going to do it. And what can I say? I'm going to do it. That's all I'm going to say. Right. Let's set this up. I'm starving. I haven't eaten all day. I feel sick. I'm stressed. It's just been horrible. I've not been able to get my videos out today. Not a good day. It's been rubbish. Absolutely. Tell you the truth. I hate letting people down. I hate not going live. I hate not doing my shows. I get really annoyed. But there you go. And I don't know yet if we've improved the system yet. We'll see. We'll see, I guess. It's still no, see, things are still very, very slow. I'm getting 10 megs at the moment. Should be 40. And there's no reason for it. So we haven't actually fixed it. If I'm honest, we still haven't fixed it. But there you go. Right. Put Tilray in your pipe and smoke it. Yes. Put Tilray in my pipe and smoke it. That's right. Tilray. Here we go. Tilray. Production. $27. $27. So TLRY. Let me bring it up here. We've still got half an hour before we do Amazon. So we've got some time. Right. Okay. Come chameleon. Got the COVID 24. Got the COVID 24, Martin. What does that mean? Got the COVID 24. Martin. Pokescroll. I'm not sure I understand what you mean. You haven't let us down, Martin. We took over the show on ourselves. What was going on? I missed all of that. I'm disappointed as well because I was really close today to breaking my record. Every month I break my record. I earn a little bit more every month. And this month I was expecting to break it. And because I've not been live all day and making videos, I think I'm going to be short. And I'm really frustrated because I've beaten it every month for about 6 months. And today I was off and we got a shorter month. We don't have, the 31st. So I'm frustrated, but... And I hate people coming round when I'm trying to work and I want to work and I don't like the disruption. And when people are expecting content to be there, I want it to be there. There's no excuses. No excuses. I don't like it. Martin, get something to eat and rest and come back strong. Everyone deserves a break, especially you. 100%. Take 50 minutes, Martin. We will be here. Yes, go take a break. Martin, if anyone needs a break, it's you. Let me make this bloody Tilray video, all right? And then I'll put it out after Amazon, okay? So just be shush, okay? I've got to beat my target tonight. If you sit back and relax, you go backwards. I've not achieved what I've achieved by getting tired and lazy and giving up. It doesn't work that way, right? So just put that in your pipe and smoke it as well. Right, okay. Tilray. Okay, here we go. Defense. Satellite. Breaking news here on Martyn Lucas Investor. Tilray. This is being made during a live video, so anything can happen, including the stock could explode and go to the moon. I know how you love that phrase, going to the moon. We've even got a man on the moon right now. What is going on with Tilray or any of the stocks? Let's look into his lens. Come over here, you. Come here. Yeah, you. Man on the moon. Well, shall we discuss it? Shall we have a little look and see what's been going on today? Some of you know, but we're going to share with you some further information. It's been a big day today in this classification, in this sector. You may have saw today that Tilray and other stocks went up 45, 50% in some cases. But a warning. I did tell you that the legislation will come before the election. It will. It's bound to. It's a vote winner. It's not about you making money on the stock market, though. No one really cares about that, but they do care about your vote. They do care about that. The money printer was on today. Lots of money was made here. It really, really stacked up, and we looked over the numbers, and things are looking very, very good indeed. But a little warning before you get too excited, this sector is about to explode, but there will be some ups and downs and bumps along the road, and you want to make sure that you don't miss out. What has happened today is we're moving towards full legalization with reclassification from Schedule 1 to 3. That's what we need. Then we get safe banking. Then we can advertise. Then we get funding. Then we can do a lot more things, and the whole industry explodes. I've always said, I'll say it again, Tilray is a $40 stock. However, it won't go $40 straight away. We didn't see it today, and we've got the information that it's happening. But what has happened? Let's cover it. Justice Department will move to reclassify marijuana in a historic shift, AP sources say. So it hasn't happened yet. The company can't move forward. We haven't got all the things open yet. All the restrictions aren't lifted yet. So the company doesn't make any more money yet. Things don't move forward yet. There's lots of things to happen yet, but it's good. It's good news. We knew it was coming. This only happened literally this came out like 30 minutes ago. It's as new as it gets. Washington, the Drug Enforcement Administration will move to reclassify marijuana as a less dangerous drug. Why is that important? Safe banking, reclassification, funding, advertisement, income streams open left, right, and center. It's a $40 stock. Is it still worth buying? Yes. Can it drop from here, though? Yes. People have lost a lot of money on this stock, and they'll take profits along the way. And why would you not? You could have bought this stock at $10 and be down today at $150, and then you're up to $238. Why wouldn't you sell? However, there will be opportunities along the way to get back in again. The Associated Press has learned an historic shift to generations of American drug policy that could have wide ripple effects across the country. This will change America forever. I've seen it in Europe. I've seen it in the Netherlands, Amsterdam. I've visited a lot. I know what's coming. It's not all good. It's not all good, but a lot of good stuff is coming for you, the investor, in any of these. SNDL and Tilray are my top two. SNDL is probably the better value, though. The proposal still must be reviewed by the White House Office of Management and Budget. The White House, though, Kamala Harris and Biden have already said they want it to happen. So it's going to happen. 100% it's going to happen. All right? Okay. The proposal will must still be reviewed by the management. The White House Office of Management and Budget would recognize the medical use of cannabis and acknowledge it has less potential for abuse than some of the nation's most dangerous drugs. However, it would not legalize marijuana outright for recreational use. Exactly. It's not a free for all. Even in the home of all this, in the Netherlands, In the Netherlands, I've been there many, many times, and they have coffee shops everywhere. You can't smoke it everywhere. You can't use it everywhere. It's still restricted in Europe, even though we've had the laws out for a very long time. You still can't have full legalization is not still available, right? Just remember that. It's not going to be the green light and everything's going to be great. There's going to be a chance to trade this along the way. However, it would not legalize the marijuana outright for recreational use. The agency's move confirmed to the AP on Tuesday by 5 people familiar with the matter who spoke on the condition of anonymity. To discuss the sensitive regularity review clears the last significant regulatory hurdle before the agency's biggest policy change in more than 50 years can take effect. Okay, so it's not all happening in 5 minutes. Once OMB signs off, the DEA will take public comment on the plan to move marijuana from its current classification as a Schedule 1 drug alongside heroin and LSD. It moves pot to Schedule 3 alongside ketamine and some anabolic steroids, following a recommendation from the Federal Health and Human Services Department after the public comment period and a review by an administrative judge. The agency would eventually publish the final rule. The proposal will be normally signed by Attorney General Merrick Garland, whose agency has ultimate oversight of the DEA. According to another person familiar with the process who spoke on the condition of anonymity to discuss internal deliberations, Garland's signature throws the full weight of the Justice Department behind the move and appears to signal its importance to the Biden administration. It comes after President Joe Biden called for a review of the federal law in October 2022 and moved to pardon thousands of Americans convicted federally of simple possession of the drug. He has also called on governors and local leaders to take similar steps to erase the convictions. So there you go. A little bit more here. I'll read a bit more. Criminal records of the use and possession have imposed needless barriers to employment, housing, and educational opportunities, Biden said in December. Too many lives have been upended because of our failed approach to this. It's time that we right these wrongs. The election year announcement could help Biden, a Democrat, boost flagging support partially among younger voters. Excuse me. Biden and a growing number of lawmakers from both major political parties have been pushing for the DEA decision as marijuana has become increasingly decriminalized and accepted, particularly by young people. A Gallup poll last found 70% of adults support legalization, and the highest level yet recorded by the polling firm, and more than double the roughly 30% who backed it in 2000. The DEA didn't respond to repeated requests for comment. Schedule 3 drugs are still controlled substances and subject to rules and regulations, and people who traffic them without permission could still face criminal law and prosecution. How much more of this story is there? There's quite a bit there. How much more? Oh, not too bad. We might as well just complete this. I want to make sure that you got all this information. Criminal records for marijuana use and possession have imposed needless barriers to unemployment, housing, educational purposes. Oh, I've read that already. Okay. I've read all that. Let me scroll down here. Some critics argue the DEA shouldn't change course on marijuana, saying rescheduling isn't necessary and could lead to harmful side effects. Jack Riley, a former deputy administrator of the DEA, said he had concerns about the proposed change because he thinks marijuana remains a possible gateway drug, one that may lead to the use of other drugs. But in terms of us getting clear to use our resources to combat other major drugs, that's a positive, Riley said, noting that fentanyl alone accounts for more than 100,000 deaths in the US a year. On the other end of the spectrum, others argue marijuana should be treated the way alcohol is. Last week, 21 Democrats, led by Senate Majority Leaders Senator Chuck Schumer of New York, sent a letter to the DEA Administrator Ann Milgram and Attorney General Merrick Garland arguing marijuana should be dropped from the controlled substances list and instead regulated like alcohol. It's time for the DEA to act, the lawmakers wrote. Right now, the administration has the opportunity to resolve more than 50 years of failed, radically discriminatory marijuana policy. Okay, well, there we go. Now then, along the journey, there's going to be opportunity to trade this stock. I don't see it going down much right now. I do think it can drop down to sort of the 220s again. We did have a nice 50% bounce. That's gone down now, but I don't think it will drop too much because we know it's around the corner. However, remember, the government doesn't run at your pace, it runs at their pace, and the election is not until November. But if it's going to be a vote winner, we want it way before November. We want people to be made aware of it. So they are going to push it through. I would imagine something like this would happen in the next month or so. Between now and then, there will be some movement, no doubt about it. So there you go. That's the breaking news today. Massive if you're in the stock. Click above my head, down below in the description, more links over here and over here, plus the 12-hour stream. Go and check that out. We're live 12 hours a day. Remember, I don't own the stock. I only own the S&P. I'm not here to pump stocks, dump stocks. I'm here just to bring you the news, the facts, and hopefully my members will make money and all the evidence and information is presented to you. Until next time, as always, take care of yourselves and each other. All right, okay, let me clear the boards from there. Did see some crazy comments coming in. Let me just read this a minute. He ain't going to do it, says Mike. That's okay, Martin. It's not a race, it's a marathon. Your followers will always be here, 1,000%. Have a tea and a custard cream, Martin. Sorts me right out. Yeah, he never landed on the moon. Welcome, Izzy. Have we got a new member here? Welcome, Izzy. Lisa Wang. Was that man on the moon, Zach? PR Mike. Thank you, Lisa. Izzy Farr. Welcome, Izzy Farr. We've got a new guest. I don't know if you are a member. Did I miss that? Izzy Farr. Welcome to you. Let's have a look. It wasn't me. I flew away this morning. Lovely stuff. Okay, we've got a very strange person here. Dear, oh dear. Wow. Okay, I'm going to ban that person from our show permanently. We've got a strange person here that just is very odd. Anyway, let's ban this person. Okay. Let's do that. Let's ban their account. There we go. Mike, thank you for taking care of that. No idea. Saying I don't account for anything, that's ridiculous. Everyone sees my portfolio live on the screen. There's my real money. There's my real trades. I'm live every day. I answer every question. And obviously we've got a very angry, sad person in here that has nothing better to do than swear and shout and make a fool of themselves. But we won't be seeing them again. They are now blocked from YouTube. Hey, Paul. Yes, we've taken. Thank you ever so much, Mike, for taking care of that. SNDL, by far the best cannabis balance sheet wise. Susan Burns, I agree with you. I have done a full, very, very deep dive video. Have you ever seen it? I'll put it up here on the screen for you. It was an hour-long video. I actually compared every single metric of all the major stocks together. It was a very concise, you'll never see a review done like this. TLRY. If you go and search Martyn Lucas TLRY, you can see our chart we've just put out for Tilray, the full resistance line, support levels, and so on. Very detailed video just gone out. But if you scroll down here, there it is. This is, oh, is that the big news? That's the big news. It wasn't that one. It wasn't that one. Another one. I did a full review. Just bear with me. Scroll down. I could look on my channel. It might be easier. I've just typed it in. It brings up all my Tilray videos in time order. Let me just scroll this a bit faster. I might just go and look. Was that it there? Yes. This is the video. This is the video here. Tilray, SNDL, Stock, Aurora, best cannabis review ever. It's a very popular video. I compare all the metrics of everything you need to know and what's going on and price predictions and every single metric. Who's buying, who's selling, profit loss, balance sheets, insolvency score, you name it, the whole lot. So for the benefit of Susan Burns, I think Susan Burns will appreciate this. Share, copy link. There you go. So Susan, I'm going to give this to you. You might want to go and check out my full review. And you're absolutely right. I agree with you that it is the best value stock. There's no doubt about that. At the moment, at least when I checked it. I don't know where it stands today. I would need to go back and look. But I did a review on it, and that's what I discovered. So, Susan Burns, thank you very much for your support. Where are you from, by the way? What part of the world are you in? I'm from England, Cornwall. My studio is here in Dallas, Texas. And I'm actually the world piano man, as voted by Elton John. Here's my music studio. I do music concerts every Friday night, and sometimes I throw them in between at the piano behind me. And there you go. If you look, if I show you behind me, there's the piano, look. Well, you can't really see it, can you? You can't really see it, but it's there. It's there. Anyway, welcome to the party. Plug Power, Jumper Guy, how are you? Just added my cannabis stocks pie in Discord news for anyone who wants to have a look. Thank you, James007, for sharing that information. Right, we got 15 minutes before Amazon earnings. So what I'm going to do is we've been preparing for the dip tomorrow. Tomorrow, we've dropped a lot today. Look at that, we're down. We've got a big drop now because of the FOMC report, and I want to be turning on the margin and buying all of this shortly. We're down big time tonight. This is a lot. I last bought the S&P at $458. It's now $460. It's not cheap enough. If we can go there before the FOMC report, we could drop another 5%. Remember, I've been saying 10% is the swings that we're getting here, and we can absolutely get that. So anyway, let's now go over to Amazon earnings. The S&P is not cheap enough. I've got plenty. I'm not turning on. I've got 10 grand of margin already. I've got $100,000 ready to spend, but I'm not prepared to spend it just yet. I will, though. Like I've always said, people say buy the dip and they never do. I always do. Yes, there are no trolls on the extra channel. That's absolutely right. There can't be, because on the extra channel we are members only. That's why we do it. In case anyone's ever said to me, why are you members only on the extra channel? That's the reason why. The extra channel is just for members. I could make more money by being general public, and people like our troll earlier could come in and talk rubbish, but we don't want it. I don't need the money, and I don't need the audience. I've got the best audience in the world. 98% of my live viewers are members, higher than any other channel on YouTube, and we're gaining about 1,000 subscribers a week, doubling our rate of growth every month. We're doing the right thing. All right. So we're members only. So only members can chat and be part of it. We don't want to waste our time listening to silly little people talk stupid in their mum's bedroom. We're not interested in that. Okay, so there you go. There are our extra members today. Let me jump in. Our Rumble audience, how are you? Zach1328. Any good day? Another good day for Rumble. Would love if you would push to or above $8 before earnings. Mindset first on Rumble. If you have got any news for me, send it via Discord. You need to be a YouTube member or a Rumble subscriber, and I will report on the news for you for Rumble. More than happy to do that for you if you want that news mentioned. All right, if you want to have the show around the things that you want it around. Okay, Amazon. Here we go. There we go. Amazon earnings. 10 minutes to go. Here we go. This is the Amazon earnings. Get ready for a lot of volatility here. Plug power, jumper guy. I have to focus on my members. We've done a lot of videos on plug. We can cover it. But right now we're focusing on Amazon. It did beat on earnings, but as you can see, the growth for the first time in a few years is flattening. And of course, that is going to be reflected in the stock price. It's also going to be reflected in the FOMC report tomorrow. Are we going to get rate cuts? How high will Amazon go today? Well, it is a beat, but we're down on previous earnings. That's what's not good. Amazon aren't used to that. The growth is slowing down. Anyway, there you go. This is the Amazon earnings. We'll be there in a minute. So we've got just a few minutes to go. I think once the earnings starts, I will just nip off camera and eat a sandwich. I will do that. I will wait until we get to the Amazon earnings, and then I will take a break and get a cup of tea and have a sandwich and all the rest of it. All right. Okay. So if you've just tuned in, welcome, good afternoon, good morning. Welcome to all of you. And it's lovely to have you here. Consider being a subscriber to our channel. And also, if you want to tap the like button, share this video out to more people, that would be absolutely wonderful. Brian, Virgin Galactic sign went up on the Delta facility. Posted Tesla cam footage to general chit chat Discord, but I didn't pick it up too well. I'll get better pictures tomorrow. Brian, did you phone? It was you, wasn't it? Who did a live phone in? Would you like to do that again? Was it you from the Delta factory? We would love to have you phone in again. With your camera looking at the Delta sign. That would be great. I'm sure Virgin Galactic investors would love that. I think it was you. It must be you if you're there at the factory. I can't imagine there's many people that watch our show who live down the road from the factory. So if you'd like to do that, we would love to have you do that for us. That would be absolutely great. Yes, it was you. Well, if you want to call in, it's the same as last time, martynlucas.com. I'll give you the link. Be glad to. Fantastic. Right, let me give you the link then. Here is the link, the live phone-in. Here is the link for you in the chat. There is the link. I'll give it you twice so you can see it. What's going on? What's going on? Right, there you go. There's the link, and I'll also thank you, James. And please call in. Yes, people would love it. And let me just close that window a second. Okay, let me come back to Amazon. All right, back to Amazon a moment. There you go. There is the link for you, and here's the password. It hasn't changed. Lucas Aids, you know how to do it. Lucas Aids, you can call live into the show. You need to be on camera. I'll have to do it next Monday, though. Sorry. That's absolutely fine. Absolutely fine. Whenever suitable for you. The password is LucasAids100. Uppercase L, uppercase A, 100. LucasAids100. Write that down. And whenever, you don't need to let me know. If you ever want to call in, Brian, call in whenever you're ready. I'll introduce you. We go live. We'll record it. and we'll put it out. It'll be great for the Virgin Galactic investors. I'm sure they'll be delighted to hear from you from the factory. I think that would be absolutely fantastic. So there you go. Absolutely right. All right. We got 5 minutes to go before Amazon. I'll post pictures on Discord tomorrow. That would be great. All right. There you go. Mike loves it. Look. Thanks, Brian. There you go. All right. Good stuff. Amazon earnings just a few moments ago now. Right. We've got 5 minutes to go. The fear index has dropped slightly this afternoon. It was approaching neutral. No surprise. It's all about tomorrow morning. It is what it is. Tomorrow morning, tomorrow afternoon rather, we've got the FOMC report, and it's gonna create some pressures on the market. No two ways about it. Just over 4 minutes to go. Welcome everybody. If you just tuned in, click subscribe, and if you can, tap the like button as well. That would be great. We're about to go into Amazon earnings the day before the FOMC report. So it's a big evening. And when it starts, I'm going to go and get something to eat. If you could tap the like button, we've only got 18 likes. It's not that popular. The earnings, the small caps, a lot more popular for people to watch. But that's okay. We're still covering it. Anyway, we're all good. Yeah, I'm ravishing, dying for something to eat. So we'll do that in a second. The moment we get to the moment the earnings start, I'll go and get something to eat. So I hope you can excuse me. Now then, just before, we've got 3 minutes to go. Before we go to the earnings, we've got a poll running. You might want to vote on this. Let me give it to you. Here is the link. Here is the link for our poll. Fed rate tomorrow. Are we going to get a cut, a pause, a hike? Undecided. So far, a pause. It's not going to go up. It's not going to go down. It's just going to carry on as before. Pause. 61.5%. Let me give it to my Rumble audience. Would you like to vote on our poll? There you go. Let me give it to my Facebook audience as well. There's the poll, 26 votes. Right, back over to Amazon. Let me check the music. There it is. 2 minutes to go. They'll probably be 1 or 2 minutes late. They always are. Not just them. Everybody's the same. Let me read the comments. I own lots of Amazon boxes. We all do. We all do, mate. Anyway, 1.5 minutes to go. I'll put the Tilray video out later. You know that person, Mike, who came in earlier, that troll? That's what upsets me about humankind. We all fight each other like, different countries. But wouldn't it be nice, at least, if we were friends in our own country? We're like a team. We were like a football team, all on the same side. Wouldn't it be nice that if you were Americans, you'd all be Americans together? If you were English, you'd all be English together. I mean, we should all be just humans together. But if we have to divide ourselves, let's be all together. Why would anyone feel the need to come onto my show and just be horrible, hateful? Why would you want to live in a world of dirt and anger and blackness? Why would you want to live that in that world and attack someone so vehemently when everything that person said was all a complete ridiculous nonsense? Why would you be like that? What is the sense of your existence? Why would you want to be that person? Why would you decide to do those things? I never understand it. I know people say it's they're sad and they're lonely and they're this and they're that, but I still don't understand why you do it. Makes no sense to me. I think life is so short, so precious. Just enjoy it. Be positive. Why would you spend a minute being negative? I don't understand. It's your own life you're throwing away. And it's horrible to see it. Horrible to be part of a world like that. Anyway, there it is. Right. Those people don't have a heart. Is that what it is, do you think? They just don't have a heart. I don't know what it is. Are they not built properly? I mean, how do you end up being like that? Was you born like that? I don't think you're born like that, are you? You're not born angry, are you? I hope not. Mind you, all babies come out crying. Maybe all babies are angry. Everyone's angry. They come out and go, "This is rubbish. Put me back." Everyone starts out angry, right? Unless something nice happens, they give you an ice cream and a cup of tea. You're angry, and that's you set up for life now. I think a lot of it's to do with the parents, isn't it? Bad parents give you a bad experience, maybe. I don't know. Not that you can blame your parents. It's your responsibility to do what you want to do, isn't it? Right, we're waiting now. We're 1 minute late. Amazon Earnings is playing music. I keep muting it because it will put copyright on the channel. The moment the music stops, I shall bring it in. Born angry. Yeah. Born stupid and angry. It's a shame, isn't it? Yeah. It's a weird world. But there you go. Still playing music. I'm listening in. I keep muting it because I don't want it to... you can't hear it, but it goes out on the extra channel, and that's not good. All right, we're 2 minutes late now. This is typical Amazon. All stocks the same. Nvidia, Palantir. Palantir was the best. They go live to the second, and they are all on camera. Best presentation you've ever seen. Netflix, I think they're on time, but I don't like their presentation. It's very, very, very bad technology, and when you think they're a streaming service, you think they know how to present an earnings, wouldn't you? People have lost all respect and disrespect everyone in their path. Yeah. Sad, isn't it? I feel... part of me feels sad for them, but mainly I feel disappointed. Disappointed for me that I have to live in a world with these people. I want the world to be just nice. I love my life. I love you, all of you. But I wish everyone else could have a fun time as well. And we could all just be happy together. Sounds ridiculous, doesn't it? Anyway, they're still playing music. Amazon now 3 minutes late. Playing music. They keep playing it. What can I say? They're still playing it. If they're playing it, if you can see it, say it. If they're saying it, seeing it. Are you seeing it? If you're not seeing it, don't say it. Still playing music. Bloody hell. 4 minutes late now. The worst was 20 minutes. It's great for me. I've got to just keep talking and talking. Nothing I want better. Keep talking my head off. Still playing music. Some college kids are taking education from other college kids with the protests. Oh, protests. You don't know how lucky you are in America. Protests. Go somewhere where there are real problems and you'll not bother protesting anymore. And why is it the only people who are protesting is unemployed kids with nothing else to do? Everybody else is at work. They're all too busy. Have you ever realised that? Have you ever thought about that? 90% of those protesting are unemployed kids with nothing to do. People running businesses. You won't see me at a protest. I'm too busy working. All right? Same with all the people complaining about not enough money. They're all the ones not doing anything about it. They're all the ones on their asses going, give me free money. People at business, people working, they ain't got time to protest. Some people have to try to bring others down so they make themselves feel better about themselves. Pretty miserable, yeah. That's right, Lisa Wang, you tell them. Hey, the Amazon pic of the Earth, it's flat. That's right, it's flat Earth. Yeah, there's no planet in the sky. It's not round, is it? No. They're still playing music. 5 minutes late now. Amazon are 5 minutes late. Unbelievable. Oh.
While also improving customer experience. One example of this is our work to increase consolidation of units into fewer boxes. As we further optimize our network, we've seen an increase in the number of units delivered per box, an important driver for reducing our costs. When we're able to consolidate more units into a box, it results in fewer boxes and deliveries, a better customer experience, reduces our cost to serve, and lowers our carbon impact. Another prominent example is our efforts to revamp our U.S. inbound fulfillment architecture to allow for better inventory placement closer to our customers. This will be an iterative process throughout the year as we work with sellers and retail partners, and teams are making good progress on their plans. Advertising performance remains strong, with ad sales up 24% year over year, excluding the impact of foreign exchange. The strength in advertising was primarily driven by sponsored products, supported by continued improvements in relevancy and measurement capabilities for advertisers. We still see significant opportunity ahead in our sponsored products, as well as areas where we're just getting started, like Prime Video ads. Prime Video ads offers brands values we can better link the impact of streaming TV advertising to business outcomes, like product sales or subscription signups, whether the brands sell on Amazon or not. It's very early for streaming TV ads, but we're encouraged by the early response. Moving to AWS, year-over-year revenue growth accelerated to 17.2% in Q1, up from 13.2% in Q4. It's useful to remember that year-over-year percentages are only relevant relative to the total base from which you start. And given our much larger infrastructure cloud computing base, at this growth rate, we see more absolute dollar growth again quarter over quarter in AWS than we can see elsewhere. We're seeing a few trends right now. First, companies have largely completed the lion's share of their cost optimization and turned their attention to newer initiatives. Before the pandemic, companies were marching to modernize their infrastructure, moving from on-premises infrastructure to the cloud to save money, innovate at a more rapid rate, and to drive more developer productivity. The pandemic and uncertain economy that followed distracted from that momentum, but it's picking up again. Companies are pursuing this relatively low-hanging fruit of modernizing their infrastructure, and with the broadest functionality by a fair bit, deepest partner ecosystem, and strongest security and operational performance, AWS continues to be their strong partner of choice. Our AWS customers are also quite excited about leveraging Gen AI to change their customer experiences and businesses. We see considerable momentum on the AI front, where we've accumulated a multi-billion-dollar revenue run rate already. You've heard me talk about our approach before, and we continue to add capabilities at all three layers of the Gen AI stack. At the bottom layer, which is for developers and companies building models themselves, we see excitement about our offerings. We have the broadest selection of NVIDIA compute instances around, but demand for our custom silicon, Trainium and inference is quite high given its favorable price-performance benefits relative to available alternatives. Larger quantities of our latest generation Trainium 2 is coming in the second half of 2024 and early 2025. Companies are also starting to talk about the eye-opening results they're getting using SageMaker, Our managed end-to-end service has been a game changer for developers in preparing their data for AI, managing experiments, training models faster, lowering inference latency, and improving developer productivity. Perplexity AI trains models 40% faster in SageMaker. Workday reduces inference latency by 80% with SageMaker, and NatWest reduces its time to value for AI from 12 to 18 months to under 7 months using SageMaker. This changes how challenging it is to build your own models, and we see an increasing number of model builders standardizing on SageMaker. The middle layer of this stack is for developers and companies who prefer not to build models from scratch, but rather seek to leverage an existing large language model, or LLM, customize it with their own data, and have the easiest and best features available to deploy secure, high-quality, low-latency, cost-effective production Gen AI apps. This is why we built Amazon Bedrock, which not only has the broadest selection of LLMs available to customers, but also unusually compelling model evaluation, retrieval augmented generation, or RAG, to expand models' knowledge base, guardrails to safeguard what questions applications will answer, agents to complete multi-step tasks, and fine-tuning to keep teaching and refining models. Bedrock already has tens of thousands of customers, including Adidas, New York Stock Exchange, Pfizer, Ryanair, and Toyota. In the last few months, Bedrock's added Anthropic's Claude 3 models, the best performing models on the planet right now, Meta's Llama 3 models, Mistral's various models, Cohere's newest models, and new first-party Amazon Titan models. A week ago, Bedrock launched a series of other features, but perhaps most importantly, custom model import. Custom model import is a sneaky big launch as it satisfies a customer request we've heard frequently and that nobody has yet met. As increasingly more customers are using SageMaker to build their models, they're wanting to take advantage of all the Bedrock features I mentioned earlier that make it so much easier to build high-quality production-grade Gen AI apps. Bedrock Custom Model Import makes it simple to import models from SageMaker or elsewhere into Bedrock before deploying their application. Customers are excited about this, and as more companies find they're employing a mix of custom-built models along with leveraging existing LLMs, the prospect of these two linchpin services in SageMaker and Bedrock working well together is quite appealing. The top of the stack are the Gen AI applications being built, and today we announced the general availability of Amazon Q, the most capable generative AI-powered assistant for software development and leveraging companies' internal data. On the software development side, Q doesn't just generate code, it also tests code, debugs coding conflicts, and transforms code from one form to another. Today, developers can save months using Q to move from older versions of Java to newer, more secure and capable ones. In the near future, Q will help developers transform their .NET code as well, helping them move from Windows to Linux. Q also has a unique capability called agents, which can autonomously perform a range of tasks, everything from implementing features, documenting, and refactoring code to performing software upgrades. Developers can simply ask Amazon Q to implement an application feature, such as asking it to create an Add to Favorites feature in a social sharing app, and the agent will analyze their existing application code and generate a step-by-step implementation plan, including code changes across multiple files and suggested new functions. Developers can collaborate with the agent to review and iterate on the plan, and then the agent implements it, connecting multiple steps together and applying updates across multiple files, code blocks, and test suites. It's quite handy. On the internal data side, most companies have large troves of internally relevant data that resides in wikis, internet pages, Salesforce, storage repositories like Amazon S3, and a bevy of other data stores and SaaS apps that are hard to access. It makes answering straightforward questions about company policies, products, business results, code, people, and many other topics hard and frustrating. Q makes this much simpler. You can point Q at all of your enterprise data repositories, and it'll search all this data, summarize logically, analyze trends, and engage in dialogue with customers about this data. We also introduced today a powerful new capability called Q Apps, which lets employees describe in natural language what apps they want to build on top of this internal data, and Q Apps will quickly generate that app. This is going to make it so much easier for internal teams to build useful apps from their own data. Q is not only the most functionally capable AI-powered assistant for software development and data, but also setting the standard for performance. Q is the highest known score and acceptance rate for code suggestions, outperforms all other publicly benchmarkable competitors on catching security vulnerabilities, and leads all software development assistants on connecting multiple steps together and applying automatic actions. Customers are gravitating to Q, and we already see companies like Brightcove, British Telecom, Datadog, GitLab, GoDaddy, National Australia Bank, NCS, NetSmart, Slalom, Smartsheet, Sun Life, Tata Consultancy Services, Toyota, and Wiz using Q. And we've only been in beta till today. I'd also caution folks not to overlook the security and operational performance elements of these Gen AI services. It's less sexy, but critically important. Most companies care deeply about the privacy of the data in their AI applications and the reliability of their training and production apps. If you've been paying attention to what's been happening the last year or so, you can see there are big differences between providers on these dimensions. AWS has a meaningful edge, which is adding to the number of companies moving their AI focus to AWS. We expect the combination of AWS's re-accelerating growth and high demand for Gen AI to meaningfully increase year-over-year capital expenditures in 2024, which, given the way the AWS business model works, is a positive sign of the future growth. The more demand AWS has, the more we have to procure new data centers, power, and hardware. And as a reminder, we spend most of the capital up front, but as you've seen over the last several years, we make that up in operating margin and free cash flow down the road as demand steadies out. And we don't spend the capital without very clear signals that we can monetize it this way. We remain very bullish in AWS. We're at a $100 billion plus annualized revenue run rate, yet 85% or more of the global IT spend remains on premises. And this is before you even calculate Gen AI, most of which will be created over the next 10 to 20 years from scratch and on the cloud. There is a very large opportunity in front of us. We also continue to make strong progress on our newer investments. Our emerging international stores are growing and moving towards profitability. Our third-party logistics business, offering services like Buy with Prime, Amazon Shipping, and multi-channel fulfillment, continues to grow well. We just launched a Prime delivery grocery benefit that lets customers receive free unlimited grocery delivery for just $9.99 a month, which is great value, and customers are responding accordingly. Later this year in Manhattan, we're launching a new, smaller Whole Foods Market concept called Whole Foods Market Daily Shop. Prime Video continues to produce compelling content, with Fallout being our latest big hit on the heels of the very successful Roadhouse movie, with strong customer engagement in our original and partner content. Our health services business is growing robustly as customers are loving our pharmacy customer experience, and we've launched same-day delivery of prescription medications to customers in 8 cities, including Los Angeles and New York City, with plans to expand to more than a dozen cities by the end of the year, with customers now getting first fill medications 75% faster year over year nationwide. And Kuiper is getting closer to having its production satellites in space and entering our commercial beta. There's a lot of invention happening across our business, and I'm super grateful to all our employees for their hard work and ingenuity. I'll close by sharing that I'm enthusiastic about how we started this year. We have a lot of opportunity in front of us in every one of our businesses to make our customers' lives better and easier. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results. Worldwide revenue was $143.3 billion, representing a 13% increase year over year, excluding the impact of foreign exchange, and near the top end of our guidance range. I'd like to highlight a couple points to help you interpret our growth rates. First, we saw an impact from leap year in Q1, which added approximately 120 basis points to the year-over-year quarterly revenue growth rate. Second, while I typically talk about growth rates excluding the impact of year-over-year changes in foreign exchange, we did see an unfavorable impact from global currencies weakening against the US dollar more than we had planned in Q1. This led to a $700 million or 50 basis point headwind to revenue relative to what we guided. Excluding this FX headwind, we would have exceeded the top end of our guidance range. Worldwide operating income was $15.3 billion, which was our highest quarterly income ever, and it was $3.3 billion above the high end of our guidance range. This was driven by strong operational performance across all 3 reportable segments and better than expected operating leverage, including lower cost to serve. The impact on operating income from our Q1 FX rate headwind was negligible. I'll speak more to our profitability trends in a moment. In the North America segment, first quarter revenue was $86.3 billion, an increase of 12% year over year. In the international segment, revenue was $31.9 billion, an increase of 11% year over year, excluding the impact of foreign exchange. We remain focused on the inputs that matter most to our customers: selection, price, and convenience. During the quarter, around the world, we helped customers save with our shopping events. We added selection, including premium and luxury brands, and we delivered at our fastest speeds ever for Prime members. Third-party sellers continue to be an important part of our offering. Third-party seller services revenue increased 16% year over year, excluding the impact of foreign exchange. We saw strong 3P unit growth, coupled with increased adoption of our optional services such as fulfillment and global logistics. For the quarter, third-party seller unit mix was 61%, up 200 basis points year over year. Shifting to profitability, North America segment operating income was $5 billion, an increase of $4.1 billion year over year. Operating margin was 5.8%, up 460 basis points year over year. We saw improvements in our cost to serve, including continued benefit from our work to regionalize our operations, savings from more consolidated customer shipments, and improved leverage driven by strong unit growth and lower transportation rates. In our international segment, operating income was $903 million, an improvement of $2.2 billion year over year. Operating margin was 2.8%, up 710 basis points year over year. This is primarily driven by our established countries as we improve cost efficiencies through network design enhancements and improved volume leverage. Additionally, we saw good progress in our emerging countries as they expand their customer offerings and make strides on their respective journeys to profitability. Looking ahead, we see several opportunities to further lower cost to serve and improve profitability in our worldwide stores business while still investing to improve the customer experience. Within our fulfillment network, we are focused on investing in our inbound network, streamlining and standardizing process paths, and adding robotics and automation. These improvement opportunities will take time. However, we have a solid plan in place and we like the path we are on. Advertising remains an important contributor to profitability in North America and international segments. We see many opportunities to grow our offerings, both in the areas that are driving growth today, like sponsored products, and in areas that are newer, like streaming TV ads. Moving to AWS, revenue was $25 billion, an increase of 17% year over year, and AWS is now a $100 billion annualized revenue run rate business. Excluding the impact from leap year, AWS revenue increased approximately 16% year over year. During the first quarter, we saw growth in both generative AI and non-generative AI workloads across a diverse group of customers and across industries, as companies are shifting their focus towards driving innovation and bringing new workloads to the cloud. Additionally, we continue to see the impact of cost optimizations diminish. While there will always be a level of ongoing optimization, we think the majority of the recent cycle is behind us, and we're likely closer to a steady state of these optimization efforts. AWS operating income was $9.4 billion, an increase of $4.3 billion year over year. As a reminder, these results include the impact from the change in the estimated useful life of our servers, which primarily benefits the AWS segment. We made progress in managing our infrastructure and fixed costs while still growing at a healthy rate, which has resulted in improved leverage. As we've said in the past, over time we expect the AWS operating margins to fluctuate, driven in part by the level of investments we are making in the business. We remain focused on driving efficiencies across the business, which enables us to invest to support the strong growth we're seeing in AWS, including generative AI, which brings us to capital investments. As a reminder, we define these as the combination of CapEx plus equipment finance leases. In 2023, overall capital investments were $48.4 billion. As I mentioned, we're seeing strong AWS demand in both generative AI and our non-generative AI workloads, with customers signing up for longer deals and making bigger commitments. Still relatively early days in generative AI and more broadly the cloud space, and we see sizable opportunity for growth. We anticipate our overall capital expenditures to meaningfully increase year over year in 2024, primarily driven by higher infrastructure CapEx to support growth in AWS, including generative AI. Turning to our revenue guidance for Q2, Net sales are expected to be between $144 billion and $149 billion, or to grow between 7% and 11% compared with the second quarter of 2023. We saw an unfavorable impact from year-over-year changes in foreign exchange in our Q1 results, and we expect that headwind to grow in the second quarter. Our Q2 net sales guidance anticipates an unfavorable foreign exchange impact of approximately 60 basis points. As part of our guidance considerations, we also continue to keep an eye on consumer spending and macro-level trends, specifically in Europe, where it appears to be a bit weaker relative to the U.S. Operating income is expected to be between $10 billion and $14 billion in Q2. This estimate includes the impact of our seasonal step-up in stock-based compensation expense, driven by the timing of our annual compensation cycle. I want to thank our customers, our partners, and our teammates around the world for a very strong start to the year, and we're excited to build on this momentum. We'll remain focused on streamlining and prioritizing projects in a way that allows us to continue inventing for customers in a cost-effective way. With that, let's move on to your questions.
At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your telephone keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Please hold while we poll for questions. Thank you. Our first question comes from the line of Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks so much for taking the question. Probably for both Andy and Brian. Historically, Amazon has shifted between periods of heavy investment and then margin expansion and back into heavier investment, but you now have a much bigger base of gross profit and overall operating income. As you think about Gen AI and capital intensity or grocery or Kuiper or healthcare, is there anything from an investment perspective that could materially impact profitability going forward in your view? Thanks.
Hi, Doug. Yeah, we have historically always mentioned that, and you have seen like a pendulum shift sometimes between profitability and investment. I think we're at the stage now where we're doing both at the same time continually. So we are more apt to talk about the specific investments that we're making and how that might impact our short-term outlook. So if you look at the progress we made on operating income and free cash flow over really the last 18 months, a lot of it's driven by improvements in our stores business, lower cost to serve. We've talked about regionalization efforts and how that's moving into inbound areas now. Advertising's been growing strong, and AWS has been strong, and you even saw AWS margins increase 800 basis points sequentially off Q4. A lot of that's driven by cost controls and expanding revenue on the top line and lower cost structure throughout the company. We do see, though, on the CapEx side that we will be meaningfully stepping up our CapEx, and the majority of that will be in our to support AWS infrastructure and specifically generative AI efforts. So I would expect that will increase. It will increase depreciation definitely in that segment. On the when we're talking about CapEx right now, in Q1 we had $14 billion of CapEx. We expect that to be the low quarter for the year. As Andy said earlier, we are seeing strong demand signals from our customers and longer deals and larger commitments, many with generative AI components. So those signals, are giving us confidence in our expansion of capital in this area. And as he also mentioned, we've done this for 18 years. We invest capital and resources up front. We create capacity very carefully for our customers, and then we see the revenue, operating income, and free cash flow benefit for years to come after that with strong returns on invested capital. So a little bit of a long-winded answer to your question, but yes, we have but the main issue that we'll see in the near term is additional CapEx, and we've talked about that. And we continue to see strong CapEx performance in our stores business. Most of that will be related to modest capital or capacity increases, additions to our same-day fulfillment network, and some Amazon logistics upgrades to the fleet. But for the most part, what you'll see is really going to be on the AWS side.
Yeah, I just would add briefly, just to summarize. I understand where the question's coming from, Doug, and I think we're in a position to do both. Is the short answer. I think there's actually an opportunity in our existing large businesses and the stores business, along with advertising and AWS. There's a lot of growth in front of us, and I think we're investing in a meaningful way. But I think we also, as we've been pretty consistent about, don't believe that we're at the end of what we can do in terms of improving our cost structure on the stores side. Yeah, I think there are really unbelievable growth opportunities in front of us, and I think what people sometimes forget on the AWS side, it's a $100 billion revenue run rate business that where still 85+% of the global IT spend is on premises. And if you believe that equation is going to flip, which we do, it means we have a lot of growth in front of us, and that's before the generative AI opportunity, which I don't know if any of us have seen a possibility like this in technology in a really long time. For sure since the cloud, perhaps since the internet. And unlike in the cloud, where so much there's a lot of work to be done to move from on-premises to the cloud. People do it and they get value out of it, which is why they modernize their infrastructure. But it's work. All of this generative AI set of workloads, which will transform every experience, are going to be built from scratch on the cloud, largely. And so it's just tremendous opportunities there, along with some of the other areas that we're investing that are really early stage. So I think it's both for us.
And our next question comes from the line of Ross Sandler with Barclays. Please proceed with your question.
Hey guys, somewhat related question on CapEx intensity in AWS. So I think the CEO of Anthropic has said that I think the next generation of models cost in the neighborhood of $1 billion to train. This would be like Claude 4, I guess, high end. And then the generation after that might be as much as $10 billion to train. So is this something that you feel like the industry will do on top of AWS? Do you feel like Olympus and some of the stuff you're doing in-house needs to kind of stay at the state of the art, or can others do that? And then how much did all this training have an impact on the acceleration that you saw in 1Q for AWS revenue? Thank you.
Well, Ross, I would tell you that we have seen kind of three, I'll call it macro trends that I think are contributing to AWS's performance, at least in the last quarter. I think, first of all, I think the lion's share of cost optimization is behind us. I think companies will be smart and have learned a lot over the last number of months in how they run their infrastructure in the cloud. But I think the lion's share of the cost optimization is behind us. And I think people have moved to newer initiatives that I would, at a macro level, describe as modernizing their infrastructure and then trying to drive value out of generative AI. On the former, I think we were on this march before the pandemic where most companies were trying to figure out how to move from on-premises to the cloud because it's more cost-effective and it's faster to innovate and they get real developer productivity. And then the pandemic hit and people were in survival mode, and then the uncertain economy led people to save costs wherever they could, and they got distracted on that. But they're back to pursuing and figuring it out because it's low-hanging fruit for them, and we see very significant growth in that space. And at the same time, we're seeing very significant momentum in people trying to figure out how to run their generative AI on top of AWS. I mentioned we have a multi-billion-dollar revenue run rate that we see in AI already, and it's still relatively early days. And I think that there's, at a high level, there's a few things that we're seeing that's driving that growth. I think, first of all, there are so many companies that are still building their models, and these range from the largest foundational model builders like Anthropic, you mentioned, who every 12 to 18 months are building new models. And those models consume an incredible amount of data with a lot of tokens, and they're significant to actually go train. And a lot of those are being built on top of AWS, and I expect an increasing amount of those to be built on AWS over time because our operational performance and security, and as well as our chips, both what we offer from NVIDIA, but if you take Anthropic as an example, they're training their future models on our custom silicon on Trainium. And so I think we'll have a real opportunity for a lot of those models to run on top of AWS. I think the thing that people sometimes don't realize is that while we're in the stage that so many companies are spending money training models, once you get those models into production, which not that many companies have, but when you think about how many generative AI applications will be out there over time, most will end up being in production when you see the significant run rates. You spend much more in inference than you do in training because you train only periodically, but you're spitting out predictions and inferences all the time. And so we also see quite a few companies that are building their generative AI applications to do inference on top of AWS. And a lot of that has to do with the services. And, the primary example we see there is how many companies, tens of thousands of companies already are building on top of Amazon Bedrock, which has the largest selection of large language models around and a set of features that make it so much easier to build a high-quality, cost-effective, low-latency, production-grade generative AI application. And so we see both training and inference being really big drivers on top of AWS. And then you layer on top of that the fact that so many companies, their models and these generative AI applications are going to have the most sensitive assets and data, and it's going to matter a lot to them what kind of security they get around those applications. And if you just pay attention to what's been happening over the last year or two, not all the providers have the same track record. And we have a meaningful edge on the AWS side so that as companies are now getting into the phase of seriously experimenting and then actually deploying these applications to production, people want to run their generative AI on top of AWS.
And the next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed.
Great. Thanks for taking my questions. I have two. The first one is on cost to serve. I appreciate all the color in the shareholder letter and even tonight on cost to serve. Andy, maybe could you just help us quantify a little more how to think about some of your North Star cost to serve goals over the next couple of years, and what could that mean for potential accompanying reasonable ranges of outcomes for North America retail margins through all of that? And then the second one, if cost to serve does improve, I think it should lead to significant incremental cash flow, even with more CapEx. So just remind us again how you sort of think through the philosophy of returning capital to shareholders in addition to continue to invest for the long run. Thanks.
Hey, Brian, this is Brian. I will start with your second question. So as far as dividends or buybacks or any other capital structure moves, we don't have anything to share with you on that today. But, I'll reacquaint you with our general philosophy. So our first priority is to invest in to support the growth opportunities and long-term investments within our businesses. And generally, we still have many opportunities to put that capital to use that would generate meaningful returns, especially as you've heard in generative AI. So, we have a great deal of passion on that and conviction on that as well. We are reaching a different stage of free cash flow. As you mentioned, we had negative free cash flow for 2 years, 21 and 22, immediately after the pandemic, as we had doubled the size of our operations network and had a lot of other expenses. That was followed by 2023 when we had our highest free cash flow ever. So, and those trends have carried into Q1. So we feel good about the free cash flow. We are, again, still anticipating a higher CapEx this year. The other thing that we're doing with cash flow right now is we're repaying some of the debt that we had taken on during that negative free cash flow period. We had reached a high water mark at the end of Q1 last year. And since then, and then through this year, we'll pay that down over $25 billion. So that's our first priority, as well as 2024 capital expenditures but otherwise nothing to share on that front. I'll tee up Andy on the stores profitability because I know there's always generally the comment about how high can operating margins go and how do they compare to historic trends. And I think the same still holds. We look back to before the pandemic and we say, first, we can achieve those operating margins even without the impact of advertising. And we're not quite there yet, but we're not limiting ourselves to that. We're looking for ways to, again, turn over every rock, look at every process and everything that we do on the logistics side, and see how can we get our cost structure down, and how can we get speed up and selection up. So it's working on a lot of fronts there, but cost is certainly front and center as we meet and improve customer experience.
And the next question comes from the line of Youssef Squali with Truist Securities. Please proceed.
Great. Thank you very much. Andy, on logistics, in September, you launched Amazon Supply Chain. Can you just help us understand the opportunity you see there? Where are you in that journey to build logistics as a service on a global basis? And does that require a step function increase in CapEx? Thank you.
Yeah, thanks for the question, Youssef. I think that it's interesting what's happening with our the business we're building in third-party logistics, and it really kind of in some ways mirrors some of the other businesses we've gotten involved in. AWS being an example of it, even though they're very different businesses. In that, we realized that we had our own internal need to build a bunch of these capabilities, and we figured that there were probably others who had those same needs, and we decided to build services out of them. So, as our business has grown, it turns out to be pretty hard work to actually import items from overseas, get them through customs and through the border, and then ship them from that point to various facilities. And then it turns out that you don't want to store those facilities in fulfillment centers because that space is really scarce. So you'd like to have them in upstream storage facilities that are very inexpensive. And then you'd like to have a way to be able to know when your more scarce supply in the fulfillment centers needs replenishment and be able to do it automatically from those upstream storage facilities. And so all of those were capabilities that we had to build for ourselves to be able to operate our stores business in the way that we wanted to and that our sellers wanted to. And so we built that capability for ourselves first, and then we opened up those services as individual services to our sellers. And so we help sellers. We have a service that allows them to get items through the border and through customs. We have a service that allows them to ship from customs to various facilities, whether they're our own or theirs, separate ones. We allow them to store items in our upstream, low-cost warehouses that they can either automatically replenish into our fulfillment centers where we ship, or they can move to other facilities that they have. We have a service that lets them, where we'll ship either to our end customers if they're selling on Amazon or to their end customers. We obviously have Buy with Prime, where we enable our Prime customers to be able to buy from our third-party Buy with Prime sellers websites, which increases their conversion 25% versus what they would do on their own, and it's a great benefit for our Prime customers. And then I would say that supply chain with Amazon is really an abstraction on top of those individual building block services I just mentioned that makes it easier for customers to have the whole end-to-end supply chain integrated. That collective set of businesses is growing very significantly. It's already what I would consider a reasonable sized business, and I think it's just really early days. It is not something that we anticipate being a giant capital expense driver for us. We have to build a lot of those capabilities anyway to handle our stores business, and we think we can, it'll be a modest increase on top of that to accommodate third-party sellers. But our third-party sellers find high value in us being able to manage those components for them versus having to do it themselves, and they save money in the process.
And our next question comes from the line of Justin Post with Bank of America. Please proceed with your question.
Great. I'd like to ask a couple growth drivers that you mentioned. First, grocery. It seems like you're still changing the threshold for free delivery or the subscription prices. Just can you say at all how much that's contributing to your growth right now? And do you think you're over the hump, or are you optimistic this can be a really big category for you? And then maybe a little bit extra on Prime Video ramp, how that ramp went versus your expectations, and do you think that could be a meaningful contributor to ad revenues, going forward? Thank you.
Yeah, I'll take them in opposite order, just on Prime Video ads. Very early days, just launched a few months ago. It's off to a really good start. I think advertisers are excited about being able to expand their ability to advertise with us in video beyond Twitch and Freevee to Prime Video shows and movies. I think they also find that the relevancy and the measurability of that type of advertising in Prime Video ads is unique for them. So it's off to a very good start. It's early days, but we're optimistic there. On grocery, I would tell you that we continue to be optimistic about what we're doing in grocery. We have a very large grocery business. It's kind of got a few different components, and we have a very significant non-perishables grocery business, much the same way that the mass merchandisers entered this business 30 or 40 years ago. These are consumables and canned goods and pet food and healthcare and beauty products. That continues to grow at a very rapid rate. And we have an organic grocery business in Whole Foods Market, which is the pioneer in that space. And that business continues to grow very nicely. We're introducing a new, smaller format in the fall in Manhattan in the Whole Foods Market Daily Shop idea. We've worked very hard on the profitability trajectory over the last 18 months and like the way that has taken shape. And then if you want to serve as many grocery missions as we aim to serve, you have to have a perishables business and a mass physical presence. And that's what we've been working on with Amazon Fresh. We've launched our V2 format in physical stores over the last few months, primarily in Chicago and Southern California. We like the early results a lot. They're really meaningfully better in almost every dimension. It's still early, and there's some things to work through, but we like what we're seeing there. And and then we'd have to decide the best way to roll those out over time. As you mentioned, Justin, we just launched a Prime benefit for grocery, which is all-you-can-eat delivery for $9.99 a month, which if you order once from Whole Foods a month, it pays for itself, or once from Amazon Fresh for orders under $40, it pays for itself. It's a very valuable offering for our Prime members, and it's off to a great start. So, we have in my opinion, we have lots of ways that we can continue to help customers satisfy their grocery needs, and we have some building blocks that I think might also change how people split up their grocery orders over time. But I continue to be optimistic that that's going to continue to grow for us.
And our final question will come from the line of Ron Josey with Citi. Please proceed with your question.
Great. Thanks for taking the question. Maybe, Andy, I wanted to ask on international profitability, just after 1Q's 2.8% margin. Talk to us just about where we are in terms of international getting or to consistent profitability. We're following a similar trajectory as North America in terms of benefiting from regionalization shift, and we saw what average distance of each package traveled actually came down by 25 kilometers and whatnot. And if you could provide any insights on maybe how inbound fulfillment architecture might add to just continued benefits on faster shipping, same day, next day, et cetera. Thank you, Andy.
Hey, Ron, I'm going to start with this one on international profitability. So, yes, in the quarter, our operating income was $902 million. And if you've watched that, we've seen a steady progression in operating income in our international segment. It's up $2.2 billion year over year. So we like the trend there. It breaks down into a few areas. I would say the established countries of Europe, Japan, as well as the UK are following a lot of the same trajectory as in the United States. They are profitable in their own right. They are, adding selection. They're adding new features like grocery. They're adding to their Prime benefits. And a lot of the work that we do in the United States carries over there. The second group is the emerging countries, and of course we've launched 10 new countries in the last 7 years. Each of those has its own particular trajectory on profitability. The first thing we see there is having a good customer experience, having people sign up for Prime. A lot of times our Prime Video benefits help with that. Then work on our cost structure as we get scale, add advertising and other things, and eventually what we see is a break-even. Countries break even, and then they make positive income and free cash flow, and are more of a contribution to the positive contribution to the international segment. So we're seeing both the emerging and the established improving, and we like the trajectory, and I think you'll see more of it as we move forward.
Yeah, I would add a few things. I mean, I'm again quite bullish on our international stores business. It's already a very large business. We've added a number of countries that are on the right trajectory, as Brian just indicated, and it's going to be a big, profitable business for us, and I really like the direction it's headed. I'll take also just the second part of your question, just really around continuing to work on cost structure. I'd say, first of all, on the regionalization side, which we've talked a lot about the last year, it may sound a little boring to talk about because we talked about it a lot of times, but I just tell you that we're not done there. A lot of the work that we've done, we still have opportunities to refine and to get more value out of that. And a lot of what we learned on the regionalization side in the U.S. was in part inspired from what we saw in Europe, which in many ways is set up as a regional network because of the nature of how close those countries are to one another. And I would say we have also learned lessons from what we've done to apply to our international operations as well. I think we see additional opportunities in all sorts of places, a good example of which is just how and where we inbound items to. The architecture we've had set up has largely had people inbounding to a couple places, and then we took, we spent a lot of effort and time and expense in breaking those down and shipping them to lots of other places. And we believe we can be much more efficient in how we use the inbound network and how we partner with our sellers. Part of what we did with our change in seller fees, we lowered the outbound fees in a meaningful way, but then we added an incentive for our sellers to inbound into locations that allow us to be more cost following and allow both our sellers and us to enjoy in those cost savings when we're able to do so. And we're seeing very optimistic signs there too. I think we're still early with respect to how we can continue to optimize the number of units per box, which has all sorts of good benefits. And then I'd just also say that it's been really interesting to watch the same-day facilities evolution in our fulfillment network. And I think a lot of people have made the assumption over the last few years that faster speeds are going to mean higher costs, and that is not the case if you build the infrastructure with the right building blocks the way we have over the last couple of years. And our same-day facilities are our least expensive facilities in the network. We still have a fraction of the number of those that we will have in the U.S. and that we'll have in other parts of the world, which will, again, both change our cost structure while increasing speed. So I don't think we're at the limits of what we can do. It's not going to all happen in 1 year. We're going to be working hard at this and inventing at this for several years, but I think we have a lot of upside in front of us.
Thank you for joining us on the call today and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon and look forward to speaking with you again next quarter.
There we go, Amazon earnings. Thank you very much for joining us. As you can see, the markets have been dropping. That's all because of fear for tomorrow. I haven't sold anything, but I am looking to buy. We're down 2% now. Remember, it's exaggerated because I'm only in the S&P, but I've got margin. So if we look at it, it says I'm down, if I share with you here, I'm down 2.17, but if I look at the S&P, it's actually only down today by just under 2. It's exaggerated because I've got margin, but not too much. It's at 460 now. I could start buying some more. A nice little dip today, but remember, it's very expensive. and we do have the FOMC report tomorrow. So I've got $100,000 ready to buy if we get a big dip. There's no point buying this 2% dip. I'm already in. I'm just waiting till I can earn more money to add more. But there we are. Anyway, that's it from me tonight. Thank you very much for joining me. I apologize for all the inconvenience today. I've had internet tech here today, trying to improve my systems. I don't actually think we've actually improved anything. We're the same as we were before. I think it is what it is. I have to live with the internet I've got, and there's not really any way at the moment I can make it any better. So we are what we are right now. So thank you very much for joining me. Tomorrow morning is the opening bell, of course. Then we've got the FOMC report. I'll be covering it live. My star guest on the show, of course, will be Jerome Powell. But that's it from me this evening. I'm going to put out the news right now about Tilray, and I will send you now to the extra channel. Please do join me there. I'll put some background music on, chill out the studio, and get this the Tilray video done for you. Thank you very much for joining me. A pleasure as always. I'm shattered, exhausted, looking forward to a nice shower, cool down, and start again tomorrow. So that's it from me. I'll send you now to the extra channel. If you want to join us there, 12 hours a day, we're there to support you. Get ready for the big day tomorrow. A lot of volatility. Be here nice and early. And John Granford, night, Martin. No worries, mate. Great show. Get some rest. See you in the morning. Thank you, Martin. Brian. Thank you, Brian. Thanks to all of you. Have a wonderful evening wherever you are around the world tonight. 59 countries, 14 languages we go out to. Have a wonderful evening. Restful, relaxing. And as always, make sure you take care of yourselves. But most importantly, take care of each other. Bye-bye for now.